These are the part of the daily buzz channel, of which today we're going to talk about the last candle profile. So the last candle profile is not that much of a huge term for you guys to, let's say for example, be fearful or be afraid of. So basically the last candle profile is the last daily candle or the last weekly candle or the last monthly candle. So for today's example, I'm going to use the last daily candle, or if we get a weekly or a monthly time frame on the examples I'm going to explain to you, it's going to be fine. So basically, if the last daily candle is a ranging candle, then we're going to expect an expansion. But if the last candle was an expansion candle, we're going to expect a ranging zone. It's more of a, let me show you, let me jump straight into it and show you what I'm talking about. Let's say for example, our yesterday candle was consolidating, was a ranging candle. When I talk about ranging candle, this is what I mean. A candle, more of a doji candlestick, right over here, a doji candlestick. This is a doji. It's not an expansion candle. Maybe this is a doji candlestick. Maybe the last previous candlestick was here. All of its wick closed above. There's no expansion, nothing to show how the market is moving. When I talk about ranging, I talk about accumulation, I talk about consolidation. You get to understand what ranging is, you'll get to understand what consolidation and accumulation is. It's more of the same time. It's more of the same terminologies, and most people use them at different times of different places. Whatever I said. So, if the previous markets was on a consolidation mode, then we are likely to expect an expansion. What do I mean when I talk about expansion? Let's say, for example, right over here, we have one of the ranging candlestick. When I talk about expansion, this is what I mean. Maybe we expect one of the candlestick to sweep liquidity and go high, or the next candlestick gonna sweep the low and goes high. Well, that depends with the period arrays, of which I've taught you before. The period arrays of which I talk about the order blocks, fair value gaps and stuff. Okay, that's what I'm talking about. Let's say for example, here was our fair value gap, then we expect the candlestick. This was our fair value gap. We expect the market candlestick to break down the low over there, then continue upwards, which it will create a turtle soup, and of which the turtle soup is what we are going to use it as our advantage. At this moment, I know, or at this point, I know you guys are trying to, what is it called? You're now understanding how the market works, because I've already taught you about the daily bars and the market structure. So if we talk about the last weekly profile candlestick, it's gonna be easier for you to understand it. So that is an example of what I'm talking about. If the market was on a ranging, but let me give you an example. If the market was on a expansion, let's say for example, these were the last bearish candlesticks. The last bearish candlestick over there, that is the first candlestick. And guys, sorry about the background noise. I'm a little bit on a noisy place, so please bear with me. So let's say for example, these were the three last candlestick, of which each and every one of the bodies was closing below the previous candlestick wicks, below the previous candlestick wicks. So these are our body candlestick. When I talk about what if the market was on an expansion mode, so the market expanded bearish, of which obviously it did target the next liquidity zone, or it did target, what do I say, it did target, talk about these, the market did target the next liquidity zone or any other of the PDRAs that which they were supposed to be there. So the next candlestick, as we see over here, sorry about this, I did not mean to put it that way, right over there. So which means the next candlestick might be a consolidating candlestick, of which it might, why is it not working like this? Yeah, like this. So the next candlestick might be closing above right there, and the next one might be at even consolidating right over there, of which the next candlestick will close above as the market changes direction. So the weekly profile or weekly candle profile is going to help us, or the last candle profile is going to help us determine if the market is going to make an expansion or going to make us a consolidation. So at this point, I know you understand what the last candle profile is and what we'll do if the market is on a ranging mode and what we'll do if the market is an expansion mode. So without wasting more time, or without wasting a lot of time, do I say that? Or without wasting more time, I want us to jump right into it. So this is how we use the last candle profile on the charts. This is an example of our chart. This is a Euro USD chart. On the Euro USD chart, you see the market is on a downtrend, is consolidating, making highs and lows, lows and high. And when we talk about consolidation, what comes up into your mind? What comes into your mind when we talk about consolidation? When we talk about consolidation, what comes into your mind is the market is in a ranging mode, and when the market is on a ranging mode, it's about to target the next high or low, depending on the PDRAs on the markets. We talk about the PDRAs. I did talk about order blocks and fair value gap. That's what we're going to use here. So we're going to analyze the market from a higher time frame, when we scale into the lower time frame, and see how exactly we are going to use the weekly and the daily candlestick profile to get entries and stuff. So here, right over here, we have a fair value gap over there, which the fair value gap was supported with the order block, and the order block is going to help us look at this consolidation mode over here. The last previous week the market was consolidating, and when the market consolidates and we talk about the last candle profile, what we expect is the market to target the previous PDRA, of which was the order block. So what we expect the market is to target the low, then go high. Then we're gonna scale into the monthly time frame for an easy view of our market structure shift. When we analyze our market into the daily, what do you see over here? We see our fair value gap. And I talked about order blocks. I said great order block must have or might have a fair value gap inside of it, of which you're gonna use it as a retracing point, of which the market might reverse, and you're gonna put entries into there. Hope you guys understand. So scaling on the weekly time frame, right over there. So we talked about it. So when you scale into the weekly time frame, what exactly do you find into it? We find a turtle subzone right over there. Where do we see it? What do we expect the market to do? Come back, then retest onto the highs right over there. So let's play our market and see what happens on the last candle profile. So this is an example of what will happen if the market is on an expansion or consolidation mode right over there. So you see what happens. The market targets the order block, of which is this line we drew over there, then into the inside fair value gap of it, then it's starting to reverse. So either, despite the fact that we're in a weekly time frame, so we're anticipating a bullish momentum maybe the next few months and stuff. I hope you've understood how we find the market last candle profile into the market. So here's another example of how, if let's say for example the market was on an expansion mode. So the market over here was expanding right over here. So we're going to read the weekly candlestick. So the first week candlestick was a bullish one, expanded, the body closed above. Let's see the next one. The next one opened and the body closed below. So as the body closed below is a sign of reversal. As you can check over here, we have a high, which is more than liquidity grab, as you can see. Then most of the candlestick body are closing below, it's not creating more high. Well, this indicates that the market, it's reversing. You might find it on other pairs and stuff, but that marks our end of the last candle profile on how I've taught you how to identify the marks, weekly candlestick and stuff. So if you wanna use the last candle profile on analyzing the markets, you're gonna start on the higher time frame, then scale into the lower time frame, and use the PDRAs of which I talked about, the order blocks and your value gap. And thank you guys. Let's meet on the next video. On the next video, I'm gonna talk about turtle soup, or maybe CRT, or even talk about the order blocks and stuff. Adios, muchachos.